What's up, world? This is Jabari Long with another episode of The Long Report. Today I have a very special guest, Miss Emma Elder Howell from Detroit Title and Escrow. What's happening, Emma? How you doing?
Hey, what up, though, Jabari?
Same old, same old.
How are you?
I'm doing fantastic. We're starting out another year, 2026, in the Metro Detroit real estate arena. Things are ever changing, right?
Oh, man. How long do we have?
We were just talking off air about really trying to educate clients and investors and homeowners and just people about the title business, the real estate business, and so we're gonna do a little of some of that today. Emma, talk to us about Detroit Title and Escrow. Where did it start? Where are you guys located, and what do you do?
All right. Well, we started 2017, but prior to that, it was just my partner and I, Davin Langford Parnell, and it was just a vision. We both left a bigger company, a corporate company, title company, and decided that we wanted to take our journey to something small and boutique. It was more so of me wanting to be able to educate without having to ask permission. And you can't do that with corporate. What I found with corporate is, can I do a seminar? Can I go to this event? Can I get money for trinkets or sponsorships, things like that? And it was, well, what does the budget look like? How much money are we going to make off of this revenue? And for me, it was, well, we may get a deal, we may not, but it's about education. So I knew early on I wanted education. So when we parted ways with our corporate company, I said, well, I'll become a real estate consultant and I'll work with various title companies, and just do my thing. So I said, if I can make $5,000 a month at that time, I'll be okay, and I linked up with Davin. And he and I talked, and he was doing his thing, and we said, well, you make 50 cents over there, I make 50 cents over here, and we'll bring it together and pay operations and split the difference. Let's do this. So he and I were working as consultants for a very long time under Full Circle Real Estate. And then in 2017, I think it was, or 16, we were introduced to a company that was in the process of closing their doors. They had the infrastructure, we had the know-all with the clients and the products and the services, and had been dibbling and dabbling in the city and across Michigan. So we said, we might have something here. And we just basically slid in and took over Fairlane Title Agency and created DBA, Detroit Title and Escrow, and that was in 2017. And that's when we took off. And from there, it's just been upward. It's been a bit of a roller coaster, but it's still been an upward, positive, and just giving back to the community, as well as providing a product, which is title insurance. What Detroit Title and Escrow does is we're a minority-based or minority-owned title company in the heart of the city, right down on 985 East Jefferson, Detroit, Michigan, right in the heart of the city. And we're in a black owner's building. We're in Jenkins Construction Building, so one of the most prominent black construction companies in Michigan.
One of
so
the
that's
biggest
a plus.
Developers around.
Man,
Jenkins. Yeah.
years. So shout out there. But so that's where we're at with our team. We have a staff of maybe about 12 folks. I'm very hands-on, as you know. And again, the primary focus or product is title insurance with Detroit Title and Escrow, but we offer more than that. One of the bigger things that we're on, and what you and I were talking about, is educating folks on understanding exactly what title insurance is. Why do you need a title company when you're interacting in a real estate transaction? Making them understand that it's an insurance product. So we service anyone that's doing real estate, whether it's a cash, land contract, purchase money mortgage, refinance, development, land assemblage, anything related to real estate. We have the ability to be a part of that in some manner as a third party to help facilitate that transaction. It's from the insurance aspect as well as the escrow services, holding money in escrow, earnest money deposits, contractual agreements. I believe they call them offers to intent. Maybe you're looking to make an offer, but you just want to show that the funds are with the title company, things of that nature. Then, of course, your standard facilitating the closing, recording, things of that nature. We also deal with the consulting aspect of it. You know, we have developers, up-and-coming developers now that are saying, I want to get into real estate and I need to look at some land, and, you know, do you have folks that you can refer out? Well, everyone is a servicer for us, so we you know, if we know an appraiser or we worked with many, here's 2 or 3, call all of them. We don't know, you know, but our primary focus is, again, to facilitate title and escrow services and make sure that at the end of your closing, you have marketable title. That's what it's about, insurance, and making sure that your title insurance is marketable, your property is marketable, where that you can go and sell it the moment you buy it, if you choose to, without title clouds and et cetera. But my biggest passion with that is being able to educate and making sure that you understand what you're buying. You understand some of the challenges that you're up against if you do not involve a title company. And then just resources, bringing folks together, because we need to collaborate. We need to know each other. We need to be amongst each other to be able to make for a better real estate industry.
100%. You know, I tell people all the time that real estate is really a relational business. You know, we get a lot of deals done. When you mentioned Detroit Title, that's who we want to do the close, and people feel comfortable. So they say, okay, this is a legit transaction. Or you mention a reputable realtor's name or a loan officer, somebody that they know, you know, has standards and rapport in the industry. You're likely to get your offer accepted or your deal signed off on because you have reputable people involved in the transaction.
Absolutely. You know, my years is, 26 years now. Yeah. So I've been stomping these streets for 26 years, and it's wild because I still get phone calls from 2004, you know, saying, hey, are you still around? You still have the same number? Yes, I do.
And she always answered the phone and returns your replies to your text messages.
I did. I woke up this morning, 8 o'clock. I'm like, oh, I don't have my glasses on, but okay.
But I told you I was having it there by 8, right?
You did.
So we talk about the title insurance process, right? What actually is title insurance? So long, people are used to going to Office Depot, getting a packet of quick claim deeds, and want to do it at the kitchen table. So what is actually title insurance?
Well, title insurance is the product, as I stated, that makes it where that you can market your investment after you've purchased it. And for me, any real estate transaction right now is an investment. So from a title insurance aspect, what we're doing is once you purchase property, we, as the title insurance escrow agents, are guaranteeing you that with your purchase, you've purchased a title insurance policy, which is, by the way, a one-time premium, a one-time cost. At the time that you buy that property, and that's what a lot of people don't understand either, is that you're in the middle of a transaction, on the closing statement, on the HUD, on the closing docs, there's a line item for title insurance, whether it's a loan policy or an owner's policy, and I'm sure we'll cover that. But that's a one-time cost for the duration of your ownership as the owner or for the duration of your interest as a lender. And a lot of people pull away from title insurance because they think, oh, it's associated with an attorney, no shade, but they think the costs are heavy, or they think that it's it's an annual thing, such as homeowners insurance. And it's, again, because they don't truly understand. The product that we offer is guaranteeing you as a new homeowner or a new investor, if you will, that we've cleared all the liens for whomever you purchased that property from. So if you purchased that property from a husband and wife, you've purchased that property from an LLC, you were in a land contract and you fulfilled the land contract, you've purchased that property from a bank-owned entity. We, as a title company, went back and did a 40-year on residential, or up to 100 years if more is needed on commercial, to make sure that there were no other interested parties that could have an interest. There were no open liens. If they were, we've disclosed and we've dealt with those before you close. That there were no parties that had bankruptcies, divorces, judgments, DOJ liens, any type of liens that we call encumbrances against that real estate. And let me be real clear with that. And just to put that, we don't insure the house. What we're insuring is the land, because the land will never go away. Your rights to that land will never go away as long as you own it. You could tear the house down tomorrow. It changes the value, but it doesn't take away your ownership.
Right.
So for that purpose, anything that's recorded against that land is attached to the land, and that's what we're looking for. That's what we're looking for. So everything needs to line up, A to B, B to C, C to D. If you skip D to F, or whatever the alphabet is, now you have a break in what we call that chain of title. And that's what our job is. You've hired us to do a comprehensive search for that time frame to identify, yes, everything lines up. Oop, we have a title issue. We're missing a deed. Perhaps someone was in a land contract 30 years ago, and the land contract seller died. The land contract purchaser didn't know that they needed to get a deed from those folks before they passed away in order to secure their ownership. So for 30 years, they've been living in this house with no deed. They thought their land contract was good enough. Now they get ready to go and get a mortgage. Yeah, a roofing
Trying to sell the
mortgage.
property.
Now we have an ownership issue. And so the question becomes, how? Why? I had this property for 30 years and no one's came back and said anything. Yeah, you had it under land contract. Yes, you've been in possession of it. Yes, you've invested in it. Yes, you've done all of that. But you never got a deed from that descendant 30 years ago.
Nobody wants to hear that.
Nobody wants to hear that. So from a title perspective, if we had not caught that, or if we had not searched that, and we went ahead and insured that mortgage and moved forward, that lender or that new buyer now doesn't have marketable title, because they can't go out immediately and sell that property or pledge it as a collateral to get another loan, because there is an issue in that chain of title. So when we're doing our title search, we're looking for from the past up to the moment that is now time for you to buy. So we insure from the past, not the future. Now, there are endorsements and stuff now, because of all the changes in real estate, where that you can purchase for future actions as long as there wasn't self-incurred. But realistically, title insurance insures you, guarantees that you have marketable title up to the moment that you give the money and you receive the deed. And you can go out and you can do whatever you want. You sign the papers, the ink isn't even dry, but you own that property because the documents are in our possession, the deed or the mortgage. And if you want to sell it, go sell it.
The same day. Buy it in the morning, sell it in the afternoon.
They do it all the time. But you have what's called marketable title. You have a title insurance policy. So for some reason, if taxes were missed, which it happens, if a deed didn't get recorded, which it happens, if a document was lost between us closing and getting over to the county or sending something back, which it happens, you contact us and you say, I can't sell my property and you guys handled my transaction. Basically, I need you to make this right. And because you have title insurance, it's our obligation, it's our contractual duty with that title insurance
To make it right.
to make it right. Now, that doesn't always mean that because taxes weren't paid, you're going to get the house back. I mean, you're going to get your money back, There's clauses in there, like any type of insurance policy. But again, the importance is that you can sleep at night knowing that we're just a phone call away. Now, with that being said, I can close my doors tomorrow. That doesn't change your insurance coverage.
She got the underwriters,
Because
right?
you have the underwriters. And that's what folks need to understand. I'm the face for the underwriter. I'm licensed. I've been licensed for the last 18 years or so. So I'm the one that's looking and reviewing and saying, yep, all the boxes line up per underwriter guidelines, and we can go ahead and insure this deal, and I'm going to sign that policy. So I'm binding the underwriter to that policy. So if I close my doors tomorrow, that's okay. Because you don't want me anyway. I'm just the person that's going to make it easy for you if you do have a claim. You don't have to go through all the paperwork. But you really want the underwriter, which is many underwriters across the state, the county, the world. So
Major insurance companies, they got the money and liquidity to take care of these issues
exactly.
when they do happen.
So when you hear folks saying, and we'll talk about that, I want a warranty deed, we talk about a quick claim deed versus a warranty deed, and I'm sure we'll touch on it, but you hear folks saying it all the time, and you probably hear me say it, I want a warranty deed. They're so stuck on, I want a warranty deed. And I correct them and say, no, what you want is title insurance with your warranty deed. The title people want the warranty deed. See, I want you as the seller to give the buyer a warranty deed. I'm going to come behind you and say, if you get them a warranty deed, I'll give them title insurance. And if anything comes up, they are going to call me first, so I'm shielding you. But if you didn't disclose something to me, everything was recorded, we're good there, but something came up that you didn't disclose and you gave a warranty deed, I'm going to sue you. The buyer doesn't have to do that. I'll sue you. The buyer can come and file a claim.
Right. So both people are protected. You, the buyer, as well as the seller.
Yeah, the seller has skin in the game too, and they don't understand that they're protected from the sense of the title company is giving title insurance to prevent them. So I tell people all the time, you want a warranty deed? I'll give you a warranty deed right now. Sue me if you want to. You know my saying, I got $5. $5 in the bank. Sue me. Take my $5.
So things like back taxes, You talked about the chain of title, like an heir might not have signed off on it, blight tickets, old land contract, municipal liens, all of those things will be discovered in the title search prior to issuing the title insurance.
Oh, absolutely. And that's the thing. The title search, and I'm glad you said that, is different than the actual title insurance. So any transaction, when you involve a title company, before we get to the point of title insurance, it's called a title search. Because that search is disclosure purposes. A lot of things may not even apply because it's back and forth with blights. You know, every city is different on blights. You know, that's that big thing in our city. Blight's not a lien. Blight's not a lien. Okay, but they're attached to the house, so it's our job to disclose them. When you're hiring me or you're engaging me to facilitate a transaction, you saying we want a title search, it's my job to give you everything that's going on with that property. So if there's blights, I'm gonna tell you about blights. If there's water, I'm gonna tell you about water. If there's 5 water accounts, I'm gonna tell you about 5 water accounts. If there's inspection fees, I'm gonna tell you about inspection fees. Judgments, liens, everything else. I'm gonna tell you everything. The blights in the water may not always be lienable items depending on the municipality, but they're there. And if I don't tell you about them in the search, it doesn't allow you as the buyer to make a good business decision if this is an investment for you. Some stuff we show, then we talk it out internally and say, okay, that's old, we can move past that. The underwriter has given us the okay. Or those liens, you guys gonna work them out outside of closing, amend your contract, what have you. But initially, our job is to disclose everything that's going on with that property, residential or commercial.
Put it all on the floor.
Yes.
And let people decide how they're gonna deal
Exactly.
with what's discovered.
Yep.
One thing, we talked about marketable title a lot. One thing that I don't like is Detroit Land Bank, which is a big property owner in Detroit, as well as the Wayne County Treasurer. When they're selling property, people are all excited about buying this $1,000 house, or I got this house for $700 from the Wayne County auction. You don't get marketable title always, right? With the land bank, if I'm not mistaken, you got to perfect that title typically. And then with the county, you got to get the FOIA to determine whether the title is insurable before you can purchase title insurance. So educate us on that.
Well, you tell me where the 750 houses at first off. I ain't seen one of them in a minute, but Jabari says 750s out there. We'll start with the land bank properties. You know, the land bank has different categories of properties that you can buy. They do have the side lots. They do have some homes that I guess are in a lower price point. Then they have their other homes that are rehab ready, you know.
Rehab ready, yeah.
And a lot of times it depends on what pocket the land bank properties are in. But what people don't realize, because they sleep on it, they think that it's a bad thing. Or they say, oh, it's a land bank, I'm not going to get title insurance. Some of the land bank properties, they do offer title insurance. And it's up to you as that investor that's reading over your paperwork. Same thing we said when I was pulling up, reading is fundamental, you know, you got to read. It's in the paperwork. And I've had a few investors that didn't check the box to want to get the title insurance. They didn't want to buy it. So they went through the closing and they got, you know, because the land bank, the county, any municipality can only give you a quitclaim deed. They can't give you a warranty deed. The difference between a warranty deed and a quitclaim is if I'm giving you a warranty deed, I warrant that that property is free and clear. I warrant that I know what's going on with that property. I have knowledge of it. It's been in my possession. I can stand behind this document, this deed. Right. Whereas if I'm giving you a quitclaim deed, I'm only giving you the interest that I have. I have no information of anyone else that may or may not have had ties with this property or had documents. So I can't say wholeheartedly that I'm certain on that. So the only thing I can do is quitclaim the interest that I have, right? So most municipalities, most banks are only going to give that type of deed because that's all that they can do. Now, that doesn't stop them from owning it. They're legally deeding out the interest that they have. But what I can say, just from my self-experience, interacting with the land bank, they have parties that are title companies that they use to do searches before they sell a lot of their properties. Okay. And they do have it set up where you have the option to get title insurance. Now, if you act on that or not, that's on you. So we've had situations where clients have gone through and didn't check the box for the title insurance, so they didn't get it, but they did go through the closing. Now they're ready to resell, and oops, we have problems. It's not marketable. And that's when we have to go back to the FOIA and all of that. Well, perhaps had you checked that box and got that title insurance,
it would have been marketable.
It would have been marketable. Now, that's a discretion of every title company on if they're willing to accept. Because just because I put something on a policy and you go next down the street and say, I want to close, and I close with Detroit Title, that title company may not want to accept my policy because it was a previous tax foreclosure. And they have that right, but most of us will say if it's a policy on it, we'll review it and make our assessment. You know what I'm saying?
Absolutely.
So just to put that out there, they do give that option and they do, offer that product. But it's up to the investor or the buyer or whomever to really understand, Now that's with some of their properties, not all. Now there are the others that you get what you get, The majority of the properties the land bank, I think, get from the county or through the nuisance abatement. So they go through the title clearing and then they do what they do, right? The county properties, same thing. The county follows the foreclosure statute. The foreclosure statute is different than us title folks and what we look at when we're insuring. So when folks come to me and they're all upset talking about, well, I got this property from the county, it should be free and clear. What do you need to do this for? I get it. I'm not saying that you don't own the property. We're not saying that those parties that lost the property in the foreclosure can come back and take your property. But what we are saying is they can come back and sue. Nothing stops them just because they didn't pay their taxes and the county now has a judgment and now they've sold the property at auction. That doesn't stop Betty from coming back saying, the county didn't do me right and I'm going to sue them. Nothing stops that. Folks like, well, it's been 5 years. There's no statute. I can wake up on year 7 and still be mad because I lost my property and I'm going to sue the county. So the way that I explain it to folks is the county went through the foreclosure due diligence, the statute, whatever that is, pictures, postings, mailings for 3 years, all of that. They turned it in to the judge. The judge looked at it and said, okay, you meet the markers, you've gotten your judgment. Do as you may. They sell it at auction. They're selling the interest that they have. They're telling you, we own it, we're selling it. They're not coming in saying you have marketable title. They're coming in saying we've wiped out all the liens and we're selling you this property, all right? So now you've rehabbed it and you want to sell it to a party on the, I call it back in the market, it's back in the real estate market. Mm-hmm. And you're asking a title company to insure it. This is the difference. It's about risk for us. What we're looking at is the risk, because anything that I put a policy on, if someone comes back and decides that they want to challenge the ownership, in this case a foreclosure, I have to step in and pay the cost to defend. Because I told you I'll insure that tax foreclosure. I told you that you're free and clear of any liens or encumbrances. I told you that if anybody comes back and want to challenge for whatever it is, I got your back. And I'm giving you a policy to stand behind that. And you can go and you, again, refinance, sell, do whatever. If you have any problems, call me. So when we're looking at foreclosures, the more recent they are, the higher the risk. Because if someone wants to challenge that foreclosure, there's no statute that stops them from challenging the county for the foreclosure, which involves the property. So now if the property's tied in litigation and you got a policy, who you calling? You're calling us. So that's why it's the difference when we say, oh, that's a tax foreclosure. Before we're going to automatically insure it, we need to review the county's foreclosure file to see if the markers meet underwriter guidelines. Was everyone that we found that had a recorded interest properly noticed to underwriter guidelines? Not pictures and postings and we don't care about certified mail. Does it meet underwriter guidelines? Did it go to the correct address? Was there another address? Was there someone else out there and the deed wasn't found? There's various things that we look at. And if it meets underwriter guidelines, then that's when we get the approval to be able to move forward and give you title insurance.
Yeah. So to all you all out here listening, you're thinking about investing, always get title insurance.
For sure. Or at least a search to start.
Yeah, the search. And if you can't get title insurance, be very cautious and hesitant on proceeding with that deal. Ignorance of the rules does not make you exempt from them. So you really have to educate yourself and know what you're doing, because if you don't, man, your lawyer gonna love you.
Facts.
So I moved out the city for a minute and moved my license into the suburbs, right? And And then some of the agents who didn't do many deals in the city, they were talking about how Detroit was coming back, and now everybody is trying to put Detroit in their name. They could be in West Bloomfield,
Man,
Clarkston.
right.
They open up a business. They want to Detroit cookies and this and that. They want to be associated with
But you
the
43
D.
miles away. Where Detroit come from?
Detroit is cool now,
Yeah.
The sports teams are doing a little bit better. Lions winning, Pistons winning. So talk about the comeback of the city and, what you're seeing with investors, local, national, and international investors buying into this market and looking to take advantage on our cheaper or lower end property price points and the ability to rent and cash flow.
Well, I can only speak to what I know because I'm not an investor. But in my mind, for my years stomping the streets of Detroit, Detroit never left. Okay,
That's what I'm talking about.
It's all about how you look at it. And what we sometimes do, I find, in any situation is we get so caught up in the midst of it that we forget what we really have. We got folks on the outside looking in, and they see the gem. We're stuck right here, and we don't see it anymore. Until someone else comes in and open our eyes, and by that time it's too late. Like, dang, I don't know if I can cuss, so I'm gonna say dang, But that's my position here. Again, I'm not an investor, so I don't want to speak on cash flow and that type of stuff. But what I can say is that I see an influx of out-of-state investors loving on our prime real estate. And I'm a servicer to out-of-state, in-state, Wayne, Oakland, Macomb, anywhere in Michigan. So do you, by all means, we will service you. But, from being a Detroiter myself, it is unfortunate that I see where we've slipped in areas and we letting other folks see what we're sitting on is that gem, and they're price pointed where it makes sense for them to buy and hold, because we do get a lot of that just from me speaking with parties on how they're handling their transactions. They're buying and holding. Some good landlords, some not so good from what I hear. I don't know. That's not my area because, again, I focus on the land and not the house, But half of our business is from investors, and probably half of that business is out-of-state investors. I mean, right now we have an influx of Canadians that are investing in our state, and because now you could do a lot of stuff online. Everything is in person.
Yeah.
It just makes it so easier. You sitting over in the Bahamas, you sitting in France, you sitting wherever, and you just killing the game here in Michigan, and we got our own Michiganders that's like, oh, man, I slipped on that one,
Yeah, and then some of them are intentionally slipping, right? And, houses right next door to their house or their grandmother's houses, they have an opportunity to buy. We go and talk to them first and say, well, this house is going up for sale. We're listing it for this month. Are you interested in buying it? No, that house needs too much work. I ain't finna buy that.
Well,
and then once a Canadian buys it, these Canadian people, they don't even live around here coming and buy these properties, yada, yada, yada. I'm like, but you had an opportunity. We offered it to you first.
I think that's an education piece, though. A lot of it, as you pointed out, and as I say all the time, you don't know what you don't know. So you got fear, you got lack of knowledge, you got some that just think that, just like you have some that don't think they could become a homeowner and they're continuing to rent, is because the fear of becoming a homeowner. So you got those that are right next door. You got a lot of old schoolers too that's like, that's not what I'm trying to do. And this is an education piece. It's a trust factor there too, because I find that quite often in what we do, especially when we're dealing with our older generation. They don't trust well, and you have someone that's genuinely coming up to say, well, I want to school you on this. Let me talk numbers with you. This might be a good investment. Well, why you want to help me?
100%. Yeah.
It's like, 'cause I just want to help you. I mean, I can't help you.
Like you try to pickpocket them while you try to educate them. You know what I mean?
Yeah.
So you hit the nail right on the head. I talk to people all the time about fear and ignorance, right? And when we talk about ignorance, we're not talking about stupidity or people being dumb. We're just talking about people not knowing.
Exactly.
I was just talking to our producer earlier before the show starts. At least once a day, I'm telling people to educate me, telling somebody, explain this to me, because I'm short of knowledge in that area. I don't understand.
Yep.
It's nothing wrong with saying you don't know and sitting back and listening. Now, it is something wrong with saying you don't know and then you want to overtalk the person who tried to educate you, because you can't learn that way.
Yes.
But fear and ignorance are the top two things that I see to stop people from doing things.
Yep.
and not only fear of failure, but fear of criticism,
Yep.
fear of the unknown,
Yep.
and all these other fears that the
Worried about judgment.
Yeah,
you know.
what people gonna say?
Exactly, because you don't know.
What if
Yeah.
I lose my money?
Yeah, yeah.
So what? You know, you
What
lost
they
a
say,
couple
scared
dollars.
money don't make money.
Yeah.
I mean, and that's, that could be viewed different ways. Sometimes I sit back, me personally, and look at, when the market was different to where the market is now, and because I know so much about the market, from deals going south because of bad investments or bad title, it was some opportunities that I was like, nope, I don't even want to take part in it because I thought I knew too much. So I was that scared money didn't make money. I had the money, have the money, but didn't want to make the investment because I'm looking at what could happen here type thing.
downside,
Yeah,
yeah.
instead of just going for it because you never know. You got to seize the moment. But with that being said, what I do find is that it's a comfort zone for some people. I get a lot of people that I'm on the phone with, and they call me for one thing, and the next thing you know, we're on the phone for 40, 45 minutes because I've given them that sense of comfort. And now we're talking and they're listening. And one thing's key, I'm talking with them and not at them. So they're taking it in and they want to know more. Now they're okay asking those questions that they probably wouldn't have asked the other professional because that comfort is there, So a lot of people don't ask questions, don't engage, don't make the moves because they're afraid to be judged because they fail, Same thing with real estate, or they pretend. Pretend is such a disservice. Don't fake the funk with me. If you don't know, that's okay. You don't know. That's why I'm here. Let me help you. Because if I don't know, I'm gonna ask you, or I'm gonna say I don't know. I don't flip all the time. I don't know the cash flow. Next question. You know what I'm saying? But that's that persona that we put up, and we miss out on opportunities.
Yeah, a lot of great opportunities just because you didn't speak up and say you didn't know. And the person that you're speaking to, we can see you get the deer in the headlights look, right? The likelihood that you don't know is like very high, but you just won't ask the question.
Yeah.
You won't engage.
And we judge people too. You cannot judge a book by its cover.
Absolutely
I'm
not.
telling you, it be some folks that come to the closing. I mean, men, women, they sitting large and they making mad moves, but when you see them, they that everyday person. You just because all shine is not.
Yeah. Everything that glitter ain't gold.
Exactly. That's what he said. But but yeah, sometimes people, they miss out on opportunities because they're judging how that person looks. So you could walk to them and make the same offer, and you got on your hoodie and your jeans, and it's just a casual day for you, and you out doing you, and they're, nah, man, I'm not gonna do that. But then let the next person walk to them, shining, talking loud, talking fast, shuffling papers. That's when they got.
It's a shame that we are like that as people, right? We're so visual. We're so big on appearances. Even me, if there's certain things that I want to accomplish, I'm going to dress a certain way. If there's people that I need to introduce myself to that I don't know, I am likely going to wear a collared shirt and a blazer because I know my invitation is going to be,
received differently.
It's going to be received a lot differently. So, appearance shouldn't be everything, but it plays a big part in everything that we do.
You're right, and you do need to know when to turn it on and when to turn it off.
You need to know your audience.
You need to. I was just about to say, you need to know your audience. Yeah,
100%. So Detroit properties, they come with a lot of complications. One of the biggest things, and I see you post about them a lot, is these water accounts. I had a scenario, and I guess this is a scenario and a question wrapped into one. If I'm looking to buy a package of property, some occupied by squatters, so no access, then some vacant, and the seller just wants to sell them all as is, how do we deal with this water issue, right? Because we can't even get in there to get a final water read. When we order the final water read from the city, my experience has been they take at least a month to even come out, which is going to put us outside of the contract dates and the constraints of the contract. So how would one tackle buying a pack of properties and protecting themselves against what that water bill could be?
It's really hard because every file has its own, or every house has its own story with water. The realistic thing is don't close until you get final reads. Now, I'm hearing you say that you may not even be able to get access to get the read or what have you, but the only way you can truly protect yourself is get the final real estate reads before you buy that property or before you sell that property. Because some of the challenges with one house in the city, that house could have 4 or 5 accounts on it, or that house could have one account on it, one main account. Typically, with any house in the city of Detroit, it starts with a 300 account. And that's assume that that's the main meter and that's the owner's account, right? Sometimes what you find is that people will buy property and they don't create a new account. They don't open up an account for themselves, whether it's a new owner account, if it was a previous tax foreclosed property, or a tenant account. They just continue to use water off of that 300 account. And that bill, if the property is sold, that bill is going to automatically transfer to a new owner because it's the 300 account. So people say, well, that wasn't my water, that was the tenant's water, but you never had them open up a tenant account, so that can transfer over. We've had situations where we, as Detroit Title and Escrow, when we call the water department, we got a doggone 2-page questionnaire, not only to protect us, but to try and protect and educate you as the seller and or you as a buyer. Because we can hold money in escrow, but sometimes it's just not enough.
It's not enough.
It's not enough, and we got 4 or 5 documents that's saying this is all the money we got, this is all we can pay. Water may not be covered under your title insurance because what used to be a true lien, water is considered a lien the moment it comes out the tap, but is not always transferred to the tax roll. So until it hits the tax roll to become a lienable item, is it really a lien?
It's in limbo.
Exactly. So it's hard to put that on a title claim. So now we try to move different to keep you from getting stuck. And sometimes it's just relying on the conversation that you're having with the water department. And just for example, we've called the water department and said, we want to get a water status. And they give us the water status. And in that spiel, they tell us, oh, the water is off. We're saying, well, that's weird. The water's off because we were told to prorate rents and security deposits. So someone's living there. So that means they've done whatever whatever it is that
Straight
happens.
pipe.
Yeah. And so that means when the water department does have an opportunity to go out and read the meter, or if they have to go in and reconnect, you have excess usage. So unless you know that type of stuff, the water escrow could have been $1,000. You get this excess usage. Now you got a water bill for $5,000. Or we have cases where the water department told us, oh, that was an actual, everything is good. And I'm on the phone with the client saying it can't be because it's a mile of water in the basement. There's running water, So to answer your question, we can call and get all the information that we can get. We can get all the accounts. But the only way to truly protect yourself is to get those final reads. That's why I'm always telling the agents and the investors and the sellers, if you're thinking about buying, think about ordering a final read before you think about pre-title, like for real, or do both. Pre-title, final read order, because it could take a month. And me as a title company, I will use a month-old final real estate read any day. You got it a month ago and you just not closing. I'm okay with that because it's a final read, so the discoveries have come out.
Right.
We've had water meter recovery bills at $5,000.
Yeah, I've seen them 8,000.
Yes.
One client got one for 14,000.
I had a water bill where the lady was living in the house since 1950 or something, and she was only being billed $20 a month. The water department never changed her bill. So when we called, we were told a $40 bill. It was the same lady. We didn't think anything of it. They didn't say anything. The new owner rehabbed the property, went to sell it. They had a $60,000 bill. Now, the water department agreed to write off 40 of it, which, okay, still left them with 20. They're calling me. I'm like, I'm not going to argue with you. File a claim. Go ahead. The claim got denied. But the catch with that was, and we'll come back to this, I know I'm jumping off topics, but 2 reasons the claim got denied. One, they closed on the property. The title company that they was working with said, well, go ahead and close and sell the property and go back to the title company and get your money. The old title.
Go back to the old title.
Yeah, go back to Detroit Title and get your money. But we're going to go ahead and close. So they did that, and they paid this bill because the title company told them that they could file a claim and they can come back to us and get the money.
So they paid the 60.
No, they paid the 20. Remember, it was
Okay.
60. Water department wrote off 40. It was 20.
Okay.
So they had engaged us. It's a process. They're waiting because a claim just doesn't happen overnight. You know,
It's a process.
a claim reimbursement or investigation. It's a process. So the title company that they were working with, because they discovered this when they were trying to close, told them to go ahead and close while this claim was in play. Come back to Detroit Title and work on working with the underwriter to get reimbursement. So they closed. The moment they closed and transferred the deed, that broke their policy.
Policy, yeah.
Policy ended. But not only that, had the policy not ended, just in speaking and investigating and following it through, the claim would have been denied anyways because the water balance was never transferred to the tax roll to technically
Come a
become,
lien.
yes. So when we're out here sharing all these water accounts and trying to educate on 300 accounts and 302 accounts and asking all these questions is because, again, as I stated, every house has its own story with the way water can go sideways. Some title companies don't even hold water escrows. They say if you don't have a final read, then we're going to pay whatever the bill is and you
That's
deal with
between
the
you and
rest.
the- You and the seller.
Yep. Yeah. So to answer your question, I really don't have a way other than to say, get them final reads or every file, we look at it, we get all the data. One file may have a $5,000 escrow. One file may have a $1,000 escrow. Who knows? But if you know you got squatters in there,
Yeah, you just know there's no way to determine what the use is, even if it's hooked up properly or water's leaking in the basement.
yep.
Is you know, we talk about buy at your own risk.
Yes.
That's really
Yes.
the case with those.
Now, what I will say is when you buy tax foreclosed properties, and a lot of folks don't know this, the moment you get your deed from the county, you know, because that water balance from whomever that previous owner was, is wrote off because it was part of the foreclosure, right?
Mm-hmm.
So when you get your deed from the county, you should be contacting the water department, sending them that deed, and setting up your own account,
New
so
account.
that they can start the investigation and the write-off of that old account, you know, making it inactive and making sure you're not held accountable, not just running in there now saying, oh, I'm gonna use this account, because if you stick to that same account, there will be a proration. You are stuck with some of that bill, you know. And if you're ready to close and now you find it out, I think I had one was $14,000. He mad. I'm sorry you mad, but do this. Contact the water department, get the write-off. In the meantime, I'm gonna hold these coins in escrow. And when you get the adjusted bill, we'll release accordingly. Because if you don't get the adjusted bill, that $14,000 is gonna transfer to my new buyer,
Right.
you know.
Man, I'm just getting exhausted sitting here talking about the complexities and all the things you got to consider
Every
when you're
day.
thinking about investing and dealing with people and squatters and properties. That $1,000 property can turn into a $15,000 property just
Yeah.
because of the water.
Yes. And this is every day, every deal. This is part of the process. It's not just getting the contract, plugging and chugging. It's
It's a lot of invisible work that has to be done
behind
to
the
even
scenes. Yeah.
get you that title policy.
Yep.
I don't know how this stuff doesn't drive you to drink, Emma. I know you've been sober for the last few years.
I look at the bottle because I still, you know, for clients, still got a few, and I look over at it, and then I look at my matcha, and I look at it, and I'm like, I'm gonna roll with the matcha because the matcha brings clarity. You know, it's 2 years now, and I'm clear that there's the clarity, so I just grab a matcha. I go exercise.
That's what's up.
Yeah.
So it used to be we had to come into the title company, right, and pull out our ID and sign the paperwork physically in office in front of a notary. What are the options now for closing remotely and dealing with split closing where maybe the buyer is in office and the seller is out the country? How do you all facilitate those transactions?
Well, the online is great, but what people got to understand is online does not mean I'm closing you on a Zoom. It's not a Zoom. You know, it's an online closing for a seller is a little bit more complex than if it's for a buyer that's paying cash. You know, if you got a cash transaction, in any transaction where there's conveyance of a document that you're conveying title, a deed, or there's other instruments like the affidavit and stuff, a notary is required on the seller side. Not always on the buyer side if it's cash. So the buyer on a cash transaction can actually get away with doing a DocuSign now, but we still require ID, and we have to run it through an ID check for validity purposes. So that's something new because there's fake IDs out here. So we have to get that information and run it through and make sure that the ID is valid and hasn't been flagged. For a seller, what we have is online platforms. They can be perceived as being a Zoom, but they're actual secured platforms because you're sharing personal information, your tax ID number, your social number, your banking information, if you will. So these are secured platforms, and if you are doing this, you have to be recognized by whatever state you're in with the Secretary of State to actually be an online notary, you know, because
Gotcha.
you get a separate notation on your seal where you have the ability to be an online notary, because not only is that part of the state requirement, but that's also with the Register of Deeds. If you're doing online, you can't walk into the Register of Deeds office and record. You have to do online recording. So you have to have those proper notations and the credentials. But the online, it's through a secure platform where you have to go through a security check. You have to be able to answer security questions, which are random questions, is not always the same questions. If you are out of the country, you reside out of the country, but you have business here, you have a tax ID, a lot of LLCs and stuff, you have your tax ID number, you have all your information, you still have to go through those same security checkpoints. And if you fail them, then we have to go old school. And you have to either go to the embassy or you have to overnight meet with the notary or what have you, depending on where you're at. But the online is great because it's you and I'm on one side of the computer, you're on the other side once we get past the checkpoints. And the closer is physically going through the closing documents with you and asking you all the questions as if you were there. And you have a digital signing, and then everything comes back digital. And we print it down and we marry it with our DocuSign, or if our buyer came in, and voila, we've closed, you know. But it's not just let me jump on Zoom.
Right.
You know, it is a recorded, stored, because if we're audited or if we're subpoenaed, we have to be able to have those documents to present, to produce. You know, so it's nice, it's convenient. It really hit heavy during COVID, you know. That's kind of where it all came at. And folks, we've just been using it there forward. But, you know, if you're getting a mortgage, if you're doing a refinance or you're getting a mortgage, you know, where they say, oh, I'm closed online. Well, that doesn't work because the mortgage and the note, you know, some lenders will accept a digital note. I mean, that's a lender's preference. But those documents for enforceable purposes, it's kind of hard to, you know, and I'm not legal, but it's hard to really argue that enforcement when you have digital mortgages, you know. So when you're getting a mortgage, that's why sometimes you closed on Monday and that buyer is out of state, and we have to wait and get those originals back before we can disperse. So you're looking at 2 days, you know, if things aren't planned accordingly. You know, and for us, we're not going to disperse on copies because FedEx, UPS, DHL, whoever we're using, they lose those originals and we've dispersed on copies. Now we got to go back and do it all over again. And what's the incentive, you know? Y'all figure it out, you know. But if we still holding the bag and we're waiting on the originals to come in, which we're supposed to anyway, because again, we are an insurance company. And when we're facilitating any type of closing, even on the loan side, we're telling the lender, we're going to give you first lien, we're going to handle these documents accordingly, we're going to carry out per your instructions. So we need originals before we can do anything, you know? So if you're getting a mortgage or a refi, it's a little bit different. Split close, man, split closes have been around forever. I mean, like, I remember when they first came out 10 years ago. Some folks just over the last few years. But split closings, they came out a long time ago when it was less title companies. So it wasn't as complex, you know, because it wasn't as many title companies with a lot of the bigger guys, you know, your First Americans and your Stewarts and all that. So we all wasn't trying to get a slice of the pie. Whereas now you got all these title companies, so it makes it a little bit more challenging, you know. But if we all can play right in the sandbox, then it can go for a smooth closing. But what happens is sometimes we lose sight of the purpose behind the closing and who we're here for. It's not about us.
It's the client, right?
It's the client. It's about that buyer and the seller. It's not about the agents and the title companies trying to outshine each other. It's the buyer and the seller. So they sometimes get a little weird, and it's like, why are we doing this, you know? But you're right, to your point. I'm representing the seller, so I'm issuing the owner's policy. Split is representing the lender, so they're issuing the loan policy. And the buyers tend to think that, well, you got my loan side, you're representing me. Whereas actually, I am representing you because I have the owner's policy. So it gets a little confusion there. I can see why you think that. Most cases, when it's a split, whomever has the loan side is the side that pay everybody. You know, so a split close, the loan, that money is paying the
Dispersed,
realtors and paying the title company. They may sometime wire us the seller's money and we'll disperse it out, or sometimes they'll pay it right out. But you can do a split close where the buyer's in the office with the split title and the seller's online, and we just meet in the middle. You can do it if they're out of state. We just meet in the middle. It's just more moving parts to it because it's more communication, but it can be done. But we got to get along in the sandbox.
Yeah, 100%. I love the fact that that can be done, because although it may take longer, you don't have to put things off when people are traveling, or you say, well, you know, I got to delay my trip because I'm expecting this closing to happen. It's delayed. You can still facilitate it.
Now, what I will say is it takes the joy out of a closing, though. You know, because that whole back in the day,
being in the room,
you know, and that's the fun part of it. You know, if it's a split close, it can get kind of rocky, kind of hairy, and if it's not explained to the buyer or the seller correctly, and the expectations aren't set correctly, it can go sideways. So, you know, it takes the fun out a little bit. You know, surrendering the keys. You know, but I guess it's just the change with the change of our industry.
Yeah, it's changing times. Technology is ruling. People rather send a text than make that phone call because it's just simpler and easier.
No,
so
you hiding behind the text. No, pick up. I'm gonna pick up the phone. Now I'll text if it's just some simple stuff.
Yeah.
But you know, because I get the calls or I get the text. Hey, can I run something by you? And then I get this long do.
come through in 2 or 3 different pages.
No,
call me.
I'm not answering that. I refuse. We need to be on the phone because I need to really understand what you're asking me here. You know, so I do the text thing, but I'm just big on good or bad news. Let's just talk it out.
Yeah, so you kind of like I am, you know, very much old school. Let's have the conversation, because once you get past it, you know, we can, you know, rebound, you know, kick the ball down the field a lot quicker once we have a conversation, as opposed to being misunderstood through text.
And the other thing I find is, especially in our industry, and especially with what I do and the questions I get, you don't even really know what you're asking me. So once I get on the phone with you and I say, okay, wait a minute, what are we doing? Okay, no, that's not what you want. You want this. And you're like, oh, yeah. So if I answer by text, I'm answering something that you think you're asking me, and I think that's what we're totally off base, and now you've made a decision based on what we assumed, you know. Whereas half of the time I get on the phone, it is not
what you text me. It's just something totally different.
I'm like, that's not what you said. So, and I learned that just from a mistake one time. You know, I'm a one-time person. One time I did that, and I was like, oh, email and text? Nope. We got to talk. You can't talk to me. I can't help you.
So Emma, or Double E as you're affectionately called in the community, I get a call yesterday. A young lady, she bought a piece of property for her daughter who was going through a divorce, and she bought it on land contract. So now that divorce is final, and she wants to transfer her interest in the property to her daughter now. Like, what's that process? She's not trying to pay off the land contract because, of course, that's still in force, but she wants to transfer the ownership of it.
Okay, so let me repeat it back to you. She's the young lady is currently she was in the land contract as a land contract purchaser. She went into it married, or did she go into it single?
Well, it's funny. The mom is married, but she was buying it for her daughter.
Right.
Who, I guess she was married.
So the
during
daughter
time.
is the one who's finalized the divorce.
Correct.
Okay. All right. So disregard. So mom is in the property, the land contract purchaser right now, and we were just waiting until the daughter finalized the divorce and now wants to transfer her land contract purchaser's interest over.
Correct.
Okay, so the correct way is to do a land contract assignment, and that's with having the seller, land contract seller, sign, as well as a land contract purchaser, both assigning, well, the seller is signing, agreeing to now enter into the land contract with the daughter, and the mom is assigning her land contract purchaser's interest to the daughter. So
Okay.
when you do it like that, it's clear that the seller fully understands that the new obligations are now being transferred by way of an assignment of purchaser's interest to the daughter. That's obviously for foreclosable purposes. And if there was a memorandum recorded, you want to do that on the land contract, the original land contract, which should not be recorded. That's just the agreement between the parties. But then you also want to do it with the memorandum. So you want to have that assignment recorded pursuant to recorded memorandum so that everyone is clear who has the purchaser's interest now. If it was done through a title company, my suggestion, the correct way with any, because again, land contract can get title insurance as well. The correct way to make sure that that's done where that the title insurance policy can stay in play is to go back to that title company and now have them help facilitate that and amend the policy, the title insurance policy, because you now have a new insured,
Sure.
because you have a new purchaser, right? And if a deed is held in escrow, if they went through a title company, more than likely, not always, and it's not always a requirement, it's just a service that we offer. If a deed is held in escrow, have a new deed done. You know, they can have the deed from the land contract seller to the original mom, but if she's transferred her interest, you really don't want her to hit title at all because she's out of it.
Right.
So it's best to have a new deed done and held in escrow, or just wait to the end of the contract and then have him, you know, when she fulfills it, have him do a deed. But me personally, I'm like, get that deed in escrow. So if they went through a title company, it's better to go back and engage their services, especially for that title insurance, and to make sure that documents are drafted correctly and recorded correctly.
And there will be another property transfer affidavit
I
so
would
the taxes
suggest-
could go up.
I would
a little
suggest
bit.
doing one. Yeah, the right way, I would suggest doing one. But, you know, and they can always, what people fail to realize is on the property transfer affidavit, there's questions. And if you just answer those questions and you check those boxes, when you take it in and explain it to whomever is at the counter, they can put those notes, you know. Now, I'm not going to say that it won't 100% stop a deed from going up, because you're really not transferring, you're not doing a sale.
Right.
You're just transferring interest,
It's an
you know.
arm's length transaction, so it's
It's a little bit different than if it was a bona fide sale, you know. But that's checking those boxes properly and or having that conversation at the counter to make sure that the notes are in the system.
Okay. All right. And I don't think we can, you know, finish this this conversation.
You got like 5
this
pages
chat. You know, this real estate is very passionate for me
I
as
know,
well,
yeah.
and a lot of these are my questions, right? You know, I mean,
Oh, you're being selfish with the audience, man.
we airing it. We gonna put it out on YouTube, but we want to make sure that you can ask and get your questions answered, right?
Right,
You're a very knowledgeable resource, and I'm not just saying this because she's here in front of me. Like when I feel like I know a lot, but when I have questions, I go to someone like Emma because I want to be exact, I want to be precise. These are investments that you mentioned earlier, and money is going to either be made or lost if it
Exactly.
goes left. So we want to make sure we got all the information.
Exactly.
But the quit claim process, are we to never use a quit claim deed again? Like what's the, you know, I've been hearing all kind of things about, you know, the validity of the quit claim. We want to verify the seller of it to make sure that it's valid. Like, you know, educate us on whether or not we should be using quit claim deeds at all.
Well, first, let me say I don't have anything against quitclaim deeds. I honestly don't. There's the fear there because generally if we think quitclaim deed, we think, oh, potential fraud. But let me just go back to, it could be a warranty deed, and guess what? Potential fraud. Exactly, because it's a piece of paper conveying interest, and it's, do I truly have interest or do I not have interest, and what type of deed am I giving you? Can you sue me or can you not sue me? That's at the end of the day, right? So separating the two questions, the validity of the deed with title insurance versus just using the quitclaim deed. If your business model is using a quitclaim deed, use a quitclaim deed. buy property on a quitclaim deed if you choose to do that, but at least get a title search. They're signaling me. At least get a title search, because that title search will at least disclose to you what defects, if any, is in that investment that you're about to make on a quitclaim deed. Now, it's only going to disclose, and it's the same thing with a warranty deed and a title search. We can only tell you what's of public record. We can only tell you when we pull names and run names and what we find. There may be a deed out there that's not recorded. There may be a mortgage out there that's not recorded. If it's not recorded, we don't know about it. The difference is when you're getting a warranty deed versus a quitclaim deed, there's affidavits and other things that we generally ask the seller to sign if it's with the title company, that again allows us to go back and sue them if we have to, or things are disclosed at the table by them filling out this questionnaire, right? So we find out more. We're inclined to find out more. Whereas if you're just doing a quitclaim deed closing, and the average title company won't insure those because there's no backing for us. You know, we're in the same boat you're in if we insure on a quitclaim deed. So it's getting a title search. It's understanding what you're getting. Still going through the same motions, checking the water, checking the blight. Title company's still going to run the names if you're getting on a quitclaim deed. And then if everything lines up and you're comfortable and that's your business decision, go for it. But at least you did the search due diligence, right? Not you going down to the county getting your own search, but actually going through the folks that do this every day and that are examining those documents, because we're going to find things that you would never know to look for. Now, that's with respect to the quitclaim deed. A lot of people use it now because we have protecting our heirship. You know, we have for generational wealth. We have for keeping it in the family, you know, with the type of deeds that they're doing and stuff, and it's good for that. Or you're going from your individual name over to your LLC, or from your LLC over to your individual name for business purposes. A quitclaim deed is the way to go for that, right? You're deeding from a trust or from yourself to your trust. Great, do that, you know. Business decision for an investment, do it as long as you do your due diligence. Now, with that being said, that's with respect to just everyday business of quitclaim deeds. The reason that you're hearing the validity of quitclaim deeds with respect to title company transactions is because of the rise of fraud and because of the claims, the rise of claims with insurance companies because of fraud. So what the underwriters are enforcing now, where it wasn't enforced 2 or 3 years ago, some of us just started doing it because we may have gotten burned in the industry because of a fraudulent deed. And it could be 5 years, it could be 7 years, it could be 2 years, it could be 4 months. As we're doing our title search, in that exam, if we come across an uninsured deed, meaning a quitclaim deed in most cases, and that deed is in the chain of title, so you got a quitclaim deed, a quitclaim deed, a quitclaim deed, we're saying an attorney wasn't involved or a title company wasn't involved. We need to verify the validity of these deeds. So, yeah, we want to get this deal closed too, but Jabari, we need you to put us in touch with the person that you got the property from, because now we need to speak with them. We need to have them sign an affidavit. We need their ID for them to say, yep, I did in fact sign that deed over to Jabari. And then if they got it on a quitclaim deed, we need them to put us in touch with whomever they got it from, because we need the same thing. And I know it's difficult. I know it's like pulling teeth, but because of the rise of fraud with deceased parties signing deeds, and we know they didn't sign those deeds, or folks in the nursing homes, and we know grandma didn't sign that deed, just from looking at the signatures and other things, this is the only way that we can protect the integrity of the policy and keep these transactions marketable. If we don't start doing this, you're going to see more and more insurance companies that are going to pull out of Michigan and other places. Then who's going to provide the title insurance for us to keep the cycle going of the resale and marketability in our industry? So that's the purpose behind it. It's not so much don't do it. It's just what we tell folks now, and I think you may have even called me, if you're going to do a deal and you are going to do a quitclaim deed, try to engage a title company or an attorney so that when it's time to have that deed verified, it's with one of the sorts. Just because you sat in front of a notary means absolutely nothing, because they're there just to notarize, yep, that is the person that's signing that deed. I have their ID. You know, some of them don't even look at the notaries. I mean, look at the names. I hate to say it. They're part of the fraud.
They just want the $100 for notarizing the document.
Exactly. So that's the reason behind that, is part of what we have to do now to stand behind the title insurance policy. Because you think about it, if you're buying a rehab property for $35 and you're getting a loan from one of these lenders and they're they're giving you 150 in draws, but you're getting 100 at close, the title company is on the hook for the 35 plus whatever was dispersed at close of that 150, 100. So we just willy-nilly, which we were doing because we didn't have this high increase in fraud. Quitclaim deed looks good. Now, some of them you can look at signatures and other things because of what we do, but for the most part, it was recorded. There's been no challenges. Great, everything lines up. A to B, B to C, C to D. We're going to insure for 35. We're going to insure for 150. Bam, here comes a claim. So now we're out there for 35, and we're out there for 100 or whatever was dispersed.
Yeah.
Yes.
It definitely makes sense.
Yeah.
So much to unpack. I think even these 5 pages weren't enough, Emma. You know? I definitely appreciate your time. As always, it's good kicking it with you.
Yes.
You know, picking your brain, understanding what's going on out in the industry. Tell our viewers how they can get in touch with you and subscribe to Detroit Title and Escrow Services.
All righty. Well, again, thank you very much for the opportunity because, you know, we can go on and on and on. But, of course, you can find me, 985 East Jefferson, Detroit, Michigan. We're in the Jenkins Construction Building, right in the heart of the city. You can follow me on Facebook under my name. I'm always sharing and talking about something real estate related. IG as well, _EE Detroit Title. And our website, www.detroittitleandescrow.com. Thanks.
All right, Emma. Appreciate you. We're going to have to do part 2 real soon.
Just
you
say
know?
when. For sure.
And to you all, I'm glad you tuned in. Hopefully you learned a lot, and what you didn't get, make sure you reach out to Emma. Be educated before you invest your hard-earned dollars into these properties, into these projects, and dealing with people that you don't know, and they may not know what's going on and what they're doing. Once again, Jabari Long for this episode of The Long Report. See you soon.